Nebius Group reported earnings this morning, and initially the stock hit $50 per share. In the first couple of minutes the report was out, and then you hit a low of $38 per share. You were down about 13% at this point. The stock ended up roaring back midway through the trading day before losing some ground into the end of the day. The stock closed up 3.2%, up another 1/10% in overnight trading. Here in this video, I will share with you Nebius Group, their earnings today, what their executives said on really their first conference call, why I do believe Nebius is one of, if not the best AI stocks to buy right now, and why it's one of my top positions, because let's be honest, you don't see this kind of trading action all the time. And there is a clear reason for this, and it has to do with analyst and analyst coverage. This is very much a under the radar kind of stock as of right now. So hit the like button and subscribe to the channel if you own Nebius, if you're bullish on Nebius, if you're bullish on AI, if you just want to stay more informed of opportunities that are presented. Well, hit that subscribe button. Now, I actually shared Nebius with you guys for the first time when the stock was $31 per share. So first things first, as far as the raw numbers, Nebius had revenue of $37.9 million. This increased 466% year over year, driven primarily by the core AI infrastructure business, which grew 602% year over year. Adjusted EBITDA loss in Q4 2024 was $75.5 million, and net loss from continuing operations was $136.6 million. So EBITDA is earnings before interest, taxes, depreciation, and amortization. Why you really want to look at the EBITDA loss here is this is the actual business. So the actual business itself, day-to-day operations of the business, lost $75.5 million in the quarter. Okay. You get this $136.6 million when you add one-time fees, when you add maybe taxes to that, right? Everything else that goes into running a business. So adjusted EBITDA gives you a better understanding of if the core business is profitable or not. In this case, Nebius is not profitable. And I know value investors, they're going to hate this, okay? They did almost $38 million in revenue, and it's a $10 billion company. There is some pretty high growth expectations for the company, and we'll get into that in just a moment. Now, for full year 2024, the group's revenue was $117.5 million, increased 462% year over year. Cash and cash equivalents as of December 31st, 2024 stood at $2.449 billion on a consolidated basis. Full year 2024 adjusted EBITDA loss was $266.4 million, and net loss from continuing operations was $396.9 million. Arkady, founder and CEO of Nebius Group, which Nebius, if you guys don't know, used to be Yandex. It was like the, Russian equivalent of Google, okay? They spun those assets off. They sold them for pennies on the dollar, essentially, to get away from Russia. And now they run this AI company that's GPUs. It is software. Software is really the aspect that I'm most bullish on personally. You have AvRide, autonomous vehicles and delivery service. You have some other subsidiary companies as well. But the founder of Nebius says, quote, "The fourth quarter was extremely eventful for Nebius. Our shares resumed trading on NASDAQ in October, and we went on to raise $700 million in December in an oversubscribed capital raise from top-tier partners, including NVIDIA, Excel, and Orbis." What oversubscribed means is there was a lot of demand for this offering. So people threw money at Nebius, essentially. He says, quote, "We made rapid progress in expanding our AI infrastructure footprint, announcing our first new GPU cluster deployment in the US and adding capacity in Europe. On the software side, we launched our new AI native cloud platform built from the ground up and our inference platform, AI Studio. Now, you can actually go use AI Studio yourself, run LLMs and, text to imaging, which, from what I've heard, I've tried it myself. But from what I've heard, it's actually a very good deal. And a lot of people already are adopting the AI studio side, but also the cloud platform side, which is that's really what's going to set Nebius apart in the years to come. Because let's face it, everyone's going to have GPUs 5-10 years from now. Like, that's very much going to be a commoditized business. It's really the software that is going to be impressive. Now, it says here in Q4, we also focused on building out our sales function, and we are now seeing the results. More clients are coming onto the platform, and our more diversified customer base is already contributing to strong growth in annualized run rate revenue. Based on contracts already in place, March ARR will be at least $220 million, and we have additional potential deals in the pipeline. Quote, given this momentum, as well as the anticipated impact of additional data center capability, or capacity, and Blackwell GPUs coming on stream later this year, I am pleased to confirm that our projected December 2025 ARR of $750 million to $1 billion is well within reach. Now, this is what the stock trades off of. The $750 million to $1 billion number. That's where you get a price to sales ratio of around 10 or so, give or take. If they come in at the midpoint, the high end, or beat that, then it's obviously going to be lower. And from that perspective, it's not expensive. Obviously, if you look at the quarterly report, then it's very expensive. But you're actually going to want to look at the full year guidance, in which they actually raised this last earnings, but kept it the same. So they technically did not raise guidance, but just reiterating that guidance with the valuation that Nebius has, well, was enough to send the stock higher today. Now, it does say here, December 2024 ARR for Nebius was $90 million, below previous guidance. This was primarily due to longer lead times for customer acquisitions, while the company was in the process of building out its sales and marketing teams and also migrating customers over to its new AI cloud platform. In November of 2024, Nebius announced the launch of its first US GPU cluster in Kansas City, 5 megawatt hour initial phase, set to go live at the end of Q1 2025. It will initially house thousands of NVIDIA Hopper GPUs. The facility is expandable to 40 megawatt hours. Now, Nebius founder and CEO said this during his final remarks. He says, quote, we have hundreds of megawatts guaranteed this year, with much more to come in the future. Not too long ago, the company's projections were to reach 60 to 100 megawatt hours in 2025. So that kind of sounds like a guidance raise, but I think in the world of AI, when, DeepSeek comes out, and that can change a lot, just literally overnight, as far as demand for GPUs, I think the company really wants to under-promise and over-deliver. I think that's why you did not get a guidance raise today, in which they logically could have raised the low end and raised the high end to basically boost up the midpoint a little bit, at least. Like, they could have done that, I believe, in my opinion. But you really want to over-deliver, not overpromise. Overpromising and under-delivering is, never a winning strategy. Now, as Jeff Davies says on X, okay, let's cuff Nebius software-like margins at 50% EBITDA margins. $2 billion run rate for ARR in 2026 seems likely, growing 50 to 100%. Net of cash and other businesses, you are paying about 5 or 7x with cash depleted for the DC build-out. Here are the catalysts from his opinion, and I agree with them, so I will share them. Avride, co-investor, mentioned on the conference call. ClickHouse, rumored to be around a $4 billion funding round that could be coming. Analyst coverage, which is coming literally any hour now. Analyst Day, which could happen this year. CoreWeave, that is expected to IPO soon, which trades at like 3 times the valuation of Nebius. And after the IPO, it could trade at a lot more than that, which really, CoreWeave's like the only comparable to Nebius on our markets. And there's a very wide value difference here. Contract wins or clarity on additional build-out plans. Not sure why they mentioned on the call. Not sure why, but they mentioned on the call that they would be a good choice to build Stargate because they are integrated, build their own hardware, racks, servers, and build lowest cost PUC DCs, and more market recognition as only quasi pure play on AI infrastructure with robotics, autonomous driving, database, and AI dataset kickers. Now, here are other highlights from the earnings call. The earnings call was really the big catalyst for Nebius. And that's where all the juicy stuff is, since we don't have any analyst coverage. And I'll explain why in just a moment. Nebius sold off so much and then recovered, and it does have to do with that analyst coverage. Now, they say, quote, "We still have not deployed all of our Blackwell GPUs. We have plenty of capacity to reach our ARR guidance of 750 million to 1 billion. They say we are well on track to hit ARR guidance. We believe we could be on track to exceed that this year." So they kind of hinted towards, again, that under promise, over deliver. The best thing for a company is to under promise and over deliver. You do tend to get less uncertainty around earnings, and when people know like that company is going to beat earnings, it just tends to do a lot better. It tends to hold the gains after earnings and really be a consistent winning stock. They say, "We added a new software platform. It took some resources to move customers to that new platform. We are done with that and focused on scaling," which is kind of what we talked about in a couple minutes ago. But this was pretty notable, and I think it referenced DeepSeek, talking about customers that finished their contracts and were looking to start new contracts. There was a delay in the new signing of contracts of new customers to actually get on. This was really just like I believe around DeepSeek, like do we need all of this GPU capability? For the most part. Now, obviously, the company goes on to say, when you're dealing with larger clients and you're dealing with hundreds or thousands of GPUs and not just a couple, it's a larger investment decision, and companies have to be prudent, take their time to evaluate things. And that was some of the delay. So essentially, some of the contracts that were supposed to be signed and done in Q4 may just now be in Q1. Like, it could have taken an extra week or two, but technically you can't report that for Q4. So I expect Q1 is going to be pretty strong because of that. Now, they say, "Our platform we are building will allow small companies or big companies to use the platform. They love the scalability and flexibility of the platform. We see contracts very diverse. Cloud, as the Blackwells come online, we expect more short-term and longer-term contracts." Now, the company did talk about their full stack a lot on the conference call. They say, quote, "When we think about our competitors, having the full stack sets us apart. We are experts at building PUC efficient. We develop our own hardware. We build the most cost-effective product on the planet. This helps us deliver the flexibility and reliability our customers are looking for. This enables us to command, quote, software-like margins. We think over time, GPUs will become commoditized, and it's the full stack that will pay dividends long term." They say, just bluntly, "We are in the early days of building our business. Our GPUs coming online in April in Kansas and Iceland. Then Blackwell's coming on later. We expect most of our ARR to come in the second half of this year, weighted to the end of the year." Now, they were asked as well about 2026 and their plans to raise capital, because even though this company does not have any debt and they have $2.4 billion of cash, eventually, in 2026 at least, they will need to raise some capital. They say, quote, "We are still evaluating the scope of demand for 2025 and beyond. We are working to create value for shareholders. We will be opportunistic on when and how we raise capital. Still working through the initial demand of Blackwells. We expect to complete pre-sales for a portion of deliveries. We are now developing longer-term contracts." And they kind of reiterated that again. And they did go on to say that the payback period, the ROCI, the return on invested capital, for H100s and H200s is around 2 to 2.5 years. Well, Blackwell's is uncertain. They don't know how long it's going to take to kind of recoup their money back for these GPUs. But again, they go on to say that they're very efficient data centers and their full stack business really helps that ROIC, those better margins. After all, they also did confirm that AvRide robots, or autonomous delivery robots, did 1,000 deliveries in the first week, and they are very pleased with that progress. They also went on to say that they don't see much of an impact from tariffs because they are doing operations in the US. They said a lot of their customers are in the US, so that's really where they're trying to expand the most right now. And they can kind of split things up regionally. In Europe, they have their Europe division. In the US, they're growing their US division. Now, they did give an update to guidance on EBITDA. They say EBITDA will remain negative, but we will be net profitable at some time this year. We just don't know exactly at what point. Blackwells will help with this as we are pre-selling them. And they said that really over and over again. This was also interesting because you never hear a company talk about this. They say, quote, "We don't have any covering sell-side analyst. We did not have the luxury of an IPO. We are one of the only companies with a market cap this size with no analyst coverage. We want analyst coverage. We are having conversations with some of those analysts." So I thought that was very fascinating. Again, we're all expecting analyst coverage will come anytime now. And that was just kind of a reaffirmation of our kind of consensus, right? The analyst coverage will come, and that's when the stock will see more upside. Okay, for valuation purposes, just the overall business, I think, deserves to be at a higher valuation. Again, compared to CoreWeave, which trades at like 3 times Nebius valuation. But, without analyst coverage, it's really just a stock that continues to fly under the radar. Now, this was also interesting. I don't know how important it is, but they did say they have a $400 million tax bill due to the Dutch government, but they paid $180 million. Confirm this is a done deal, but they basically said they paid $180 million. It's not confirmed yet. They're still waiting to see if that's enough, but that might be all they have to pay of this $400 million, and they would be able to actually put the leftover money to work with their expansion plans instead. So that could give the company, honestly, another quarter or so of CapEx runway. Nebius also says that they have hundreds of software customers, but they will have thousands going forward. Now, option activity for Nebius today was virtually all positive. You had 31 different trades from hedge funds and institutions, totaling $7.05 million with a positive order value of 98%. So, this is a common story for Nebius. You really don't have much of any bearish option activity ever for the stock. Over the past week from hedge funds and institutions, you've had 216 different trades totaling $144 million with a positive order value of 93%. Like, there's almost no bears on this stock, at least not in the options market. And for anyone that does not know this already, that maybe is concerned about, dilution or something coming down the line, I don't think that's something to be too concerned with. Obviously, you always have to pay attention to that. But the CEO owns 13% of the company, and another longtime employee owns 4.5% of the company. Effectively, insiders, just those two, own 17.5% of the entire stock outstanding. So if you get hurt, they're going to get hurt. Their interests are perfectly aligned with shareholders. Now, with the capital raise they did with Orbis here, Orbis is now the second largest shareholder, owning 6.68% of the total stock outstanding. So, they're very confident in Nebius. You can also see Excel, the other, partner that went in pretty large with the $700 million offering, bought almost 2% of the company as well. So just these two partners, or investors at this point, bought 8%, little over 8% of the entire company in that offering. They bought up as much as they possibly could. And as you guys know, Nvidia was also included in that offering, although they own a lot smaller position of that. I think it's a third of 1%, only worth about $34 million, but that could just be a start for Nvidia. Now, as to why Nebius fell so much and then recovered, I think it really has to do with not having analyst coverage. This stock is beholden to retail investors, the few of them that know about this stock, and the algorithms. Now, mainly the algorithms. So when the earnings came out, I think people were pretty bullish, right? I think the algorithms actually sent the stock higher from 44 to 50 because this was actually a good report. They had, Nebius had great things to say. But then retail with their trading, mentality, sell first, buy, sell first, ask questions later kind of mentality, sold the stock off, and then retail got back into the stock. Without analyst coverage, there's not too much in terms of like big money actually buying the stock. So big money really is not participating in the way that you would think if you looked at any other $10 billion company. They're really not involved in this company at all. So it's algorithms and retail. And that's why this stock can be so volatile. And well, I think that's the beautiful part about this stock as well. Given everything else we've talked about, which is great, once big money catches on to this, to what they're truly doing, that's going to be a lot of additional upside. In my personal opinion, that could probably double the stock pretty easily. Again, you don't have any analyst coverage either, so there's you don't have that. And I do believe we will get analyst coverage coming here over the next couple of days. So overall, I would give Nebius actual earnings report like a B grade. I think they executed to the best that they possibly could have. Just some things were out of their control as far as lead times and delay between contracts. That can get kind of nuanced. I would say it's about a B plus earnings report. As far as the guidance, the conference call, the confidence, and really what they had to say, that's looking more like an A minus. So, I mean, for a company with the valuation that they have, with the lack of attention, the lack of, knowledge that hedge funds and institutions have, that's why you're going to get the volatility. And that's why the stock traded like it did. And I do think that's where a lot of the upside will come from in the short term for the stock, is when you get that analyst coverage and when Wall Street really starts to pick up on this names. So let me know what you think about this down below in the comment section. I do have a $100 year-end price target, but when this thing goes, man, it's gonna go and it's not gonna look back. So take that for what you will. I'm not a financial advisor. I'm not a financial planner. Of course, come to your own conclusions. The stock could crash tomorrow. Stock could go to $200 tomorrow. You never know. It's a high risk, high reward kind of trade. Contact a financial advisor if you have any questions, if you don't know what to do, if you don't know if it's a stock worth owning or not, because I am not a financial advisor. Got to get that disclaimer out there. You guys have a great rest of your day, and I will see you in the next one.